Hi, my name is Aziz, a fellow of the Association of Chartered Certified Accountants. Welcome to part 6C of the course Bookkeeping up to Final Accounts. Today, I'm going to talk about closing stock or inventory, the double entry aspect, and balance sheet charges, depreciation charges, the double entry aspects. So I'm only going to mention discuss the double entry aspects of both items, that is stock or inventory and depreciation charges. Now let me start with stock or inventory. As we know, there are a lot of accounting standards. There are accounting standards that deal with stock or inventory. Examples are the old SSAP 9, that's in the UK, Financial Reporting Standard 102, also UK, and then the International Accounting Standard number 2. But those accounting standards need to be tailored to suit the situation in your work environment. They shouldn't just be applied blindly. They need to be adapted to suit your work environment. For instance, among approved stock valuation methods are first in, first out, last in, first out or LIFO, and weighted average. But these methods are suitable for large organizations where a whole department is likely to be devoted to stock management or warehousing, headed by a full-time warehouse manager and a number of warehouse staff. Also, in a large environment, in a large business environment, the system is likely to be computerized or automated, so that every time items are added to or removed from stock valuation will take place automatically on an ongoing basis. In addition, there is likely to be a stock ledger model in the system which will communicate with the nominal ledger on a real-time basis, so that every time there is a change in stock value or stock level, the nominal ledger will be updated instantly. You will get that in a properly integrated environment. Now, however, small or medium-sized businesses, or even a multi-million pound business environment that holds very few stock items is not likely to require this level of sophistication because it will not be cost effective. So, if you have a head of finance who wants to bring about changes which are based purely on textbook theories without actually studying the situation on the ground, the changes are likely to be totally out of touch with realities. Then it is only a matter of time before they are asked to resign. It's only a matter of time. And when that happens, no amount of intimidation or blackmail will make top management give them any severance pay. It will just be a case of, please give us your resignation letter before the end of the day. Let us have your resignation letter. Resign. Your P45 will be in the post soon, and please shut the door on your way out. Bye-bye. That is what will happen when people just walk into an organization and start making changes without properly understanding the organization's situation. So, this is what I believe should happen in every environment. When you find yourself in a small business environment, a medium-sized business environment, this is what should happen. You should do this. Okay? Now, let me just take you to stock take. Now, my notes on stock take. Okay? Now, screen. Yeah. There are things you need to do in a small business environment or even a multi-million pound business environment that keep very few stock items. Follow the following procedures. Okay? You need to agree the stock take, the date for stock take with the departmental or store manager. If possible, agree the date for stock take in advance for a whole year, because in a small business environment, you don't need sophisticated accounting system to do your stock take or do your stock valuation. It will just be a question of going in at the end of the month to count stock items. Okay? Agree the date with the stock manager, with the store manager or departmental manager in advance, so that if anybody is not going to be available, they will let you know in advance that they will not be available. Okay? Create a stock sheet, which I've already shown, which I showed in my previous video, and you will see it again today. Create a stock sheet and pre-populate that stock sheet with items that you usually buy from your regular suppliers. Okay? Now, those items you will find in the price list, because you should have there should be a price list created either by yourself or by the store manager or departmental manager. You should work together to create a price list. Now, the price list will be, the information in the price list will have been obtained from your regular suppliers. Okay? The stock that you'll be buying, the price that they will be charging for what you are buying, because you also need the details when you are raising, when your departmental managers are raising purchase orders. Okay? Now, pre-populate the stock sheet with details extracted from the price list. I will show you a price list in a minute. You have seen it before. Here we go. This is the price list that has already been created. This is the list from which you will pre-populate your stock sheet. The sheet that we use for your stock count. You will pre-populate it. Say items and stock code. When you get to the site where you have to count the stock sheet, then you will enter the quantity of each item found at the stock location on the stock sheet. Okay? Distribute the pre-populated stock sheet among the people who will participate in the stock take. Okay? The pre-populated stock sheets will be distributed among those who will participate in the stock trade. And if it's just you, no problem. Take those sheets, the pre-populated sheet, to the store location to conduct in order to carry out the stock count. Now, there could be problems when you get to the site. Now, and I've seen that before. You get to the site, the manager who previously agreed that you could come in and do your stock count, no problem. Everything will be arranged, well laid out for you to do your stock count. But when you get there, you are not able to gain access to certain store location. Some rooms are just locked. And you are suddenly told that the person in charge is not around, is off sick, and nobody else has the key, so you cannot count anything in that room, in those rooms. Well, if that happens, what should you do? Simply count what is available. Count what you can count. No problem. Enter the quantities counted on your stock sheets. Now, when you get back to your office, draft a carefully worded email and let that store manager or departmental know that actually thank the manager for their cooperation or maybe lack of it, but make it very clear that you will report what you have been able to count and copy that email to the head of finance. Okay? Copy that email to the head of finance. Now, again, you may have to do your stock count in a hospitality or catering area. That's a very sensitive area because catering or hospitality, people go there to eat, members of the, so the level of hygiene in that environment is very high. There is a zero tolerance for unhygienic or unsafe practices in that environment. There's a zero tolerance. Therefore, it only makes sense if you allow the catering manager to do the stock count on your behalf, to count the stock items and give you their figure for inclusion in the nominal ledger. You really cannot go into this, into those areas to do the stock count yourself. It will not be hygienic for an accountant to go into catering area and be putting their hand in the freezer, in the deep freezer, and pulling out bags of vegetables for counting, especially in the main winter. It will not be safe, it will not be hygienic. So any head of finance who suggests that should urgently book an appointment with the mental health team of their local hospital, because really, I would regard that as a very serious psychiatric issue, really. So, then after the stock take, what you do after the stock take? You scan the stock sheets, okay? The stock sheet that you have populated with items, with quantities and so on. Scan them, forward those sheets to the manager, just to confirm that you have shared the details of what you have counted with them. The details that you are going to include in nominal ledger have been shared. So it will not be a surprise when they get to their management meeting and they tell them that, oh, this is the item you have, this is the value of the item that you have in your stock at the end of the month. So, having done that, assign monetary value to every stock item on your stock sheet. Assign monetary value to every item on your stock sheet. Classify and code every item on the stock sheets. Code them into categories as you have in the nominal ledger, such as consumables, paint and materials, small tools, etc. I'm going to show you that in a minute. And then, finally, enter those stock values on a journal, which will then upload into the nominal ledger. Okay, this is what I mean when I say assign nominal value and code every stock item. It will be like this. Okay, for instance, I have coded this. Now, these are completed stock sheets. Okay, for instance, mirrors are among the stock items. We found, this is the stock code, okay? We found 6 mirrors. And based on the price list that I showed you earlier on, the cost price, it cost the organization £6. Okay? But then the organization also sells each item for £72 in order to make its own profit. Because when a vehicle is brought into the company for repair, and the mirror is damaged and needs replacing, now the organization will sell the mirror to the vehicle owner at £72 and fit it to the vehicle. So that's how they make their profit. Now, you are required to state the cost of each item on your stock sheet and then put the selling price as well. Because FRS 102 and United Kingdom, IAS 2, International Accounting Standard number 2, that International Accounting Standard, and the current Financial Reporting Standard number 2, the United Kingdom, says that stock must be valued at the lower of cost and net realizable value, or street value. As you can see, we can't talk about street value in this case because we don't know what, well, we do know that when you sell the item for £72, the item costs us £60. So, if we assume that £72 is what the item will fetch us on the open market, which is not likely to be the case. I mean, but we have to assume that is the the street item. But it will also cost us money to get it up there, to sell them. But we don't know how much it will cost. So I am going to now choose the lower of cost and net realizable item, net realizable value as demanded by accounting standard. So I am going to record the mirrors, 6 mirrors at £60 each, which will give me a final value, which will go into the nominal ledger of £60. And the same thing will go for every item here. Now, also, I have classified the stock items that I counted and put them on different sheets according to the categories. For instance, here, what I have here are parts and accessories. Now, look at the codes. You also notice that I'm giving them, each of them, 2 different codes. Because stock, when you record your closing stock, the balance sheet will be debited because the closing stock will be your current asset. The profit and loss account will be credited because you are carrying it forward into the new period, into a new period. Okay? The balance sheet item will be, the balance sheet code will be debited, but then at the same time, the profit and loss account item code, profit and loss account code will be credited because you are carrying the item forward into the new period. Now, this 1511, which is the balance sheet code for parts and accessories, I can show you on the chart of accounts that it is on the, it's in the current asset section. You see 1511, you can see on the balance sheet. But again, the other side of it is 6105, which is the profit and loss account code. That is an expense. Okay, so it's which is the profit and loss account side of the other of the entry, 6105. Now let me take you to the chart of account again, and I show you where 6105 resides. 6105. Yeah, closing stock, profit and loss account, parts and accessories. Okay, now let me just explain to you again. I will explain it to you by way of diagram. Now look at closing stock. Look at closing stock. Look at the treatment of closing stock. For instance, in the month of April, let us say that the value of closing stock is £10. Okay? That will be debited to a balance sheet code as a current asset. But it will also be credited to a profit and loss account code as amount to be carried forward. That is a cost that has been deferred. Okay? Now, when that cost gets deferred, it becomes a current asset in the balance sheet. But in the next period, in the following period, new period, what you have carried forward as a current asset this time will become your opening stock in the next period. Okay? For instance, the closing stock in the current period will become the opening stock. It will now closing stock in the current period, which is a balance sheet item and a current asset, will go into the following period as the opening stock and also a profit and loss account item. Okay? And as you can see, in the month of May, the closing stock is £12. Say, is £12 debited to the balance sheet code as a current asset, but credited to the P&L account code as cost deferred. And as a current asset, it gets carried forward into the new year as an opening stock in the profit and loss account item, and so on and so forth. Now, when it gets carried forward as an opening stock in the next period, it means when you are calculating your cost of sales in the next period, you are saying opening stock, that is cost that you brought forward, last month, plus what you have bought, minus closing stock, that is cost deferred, will give you your closing stock, so that you can arrive at your gross profit or gross loss in the period. Okay? So, let me just recap. Closing stock at the end of one period is a current asset. But in the next period, it becomes an opening stock and forms part of cost of sales calculation. That is how it is done. Now, I am going to demonstrate that in a minute. Now, look at my journal entries. As you can see, I have journalized those items, the stock items. For instance, when you want to do that, after you classify all the stock items on the sheet, month-end stock, okay, all of these are parts and accessories. Look at the total here. The total is 4360. It is this total that I will debit to a balance sheet code and credit to a profit and loss account code. Okay? This and the same thing will happen to all the other items that I've classified and coded. You see, so here we are. This is my draft journal. So this is my draft journal. What I'm now going to do is put this draft journal on the P&L account, on the extended trial balance as a draft. Okay. First of all, I'm going to look for code 1511 on the extended trial balance. Okay, 1511. In order to debit that, that's the balance sheet code. I'm going to now debit it. 1511. I am going to use the adjustment column for that. Okay, that's my adjustment column, and I'm going to debit it. Okay, 43.60. As you can see, it has jumped to the balance sheet side as a current asset. That 43.60 is now on the balance sheet side as a current asset. Okay, I am now going to again credit it to the P&L account code, a P&L account code, and that P&L account code is 6105, parts and accessories, closing stock, parts and accessories, 6105. Okay. As you can see, look at the profit and loss account side. On the extended trial balance, that 43.60 is there. Okay, as cost deferred is on the credit side. Cost deferred. Now, I'm going to do the same thing for all the other items of stock that I have on my journal, on my draft journal here. Now, look at this one, 1511, closing stock, paints and materials. Again, I'm sorry, 1521. So I'll go to my draft journal and look for 1521 there. Okay, 1521. Okay, 1521, closing stock, paint and materials, paint and shop materials. That again is a balance sheet item, and I'm now going to debit it as a current asset in the balance sheet. I am also now going to go to the profit and loss account side. Profit and loss account 6110 is the profit and loss account side. 6110. Okay, that I will credit with 905. See, as I'm doing this thing, you can see that my adjustment column is balancing. Okay, now I'm going to repeat the same thing for the other item of stock. Okay, this time is going to be closing stock, balance sheet, small tools, and the balance sheet code is 1501. Okay, 1501. Okay, 1501. Small tools. What is the amount? The amount is £38.50. Okay, the same amount is going to be debited to the profit and loss account code, which is 6100. 6100. Closing stock, profit and loss account, small tools. 6100. Okay, and 3850. As you can see, that again has jumped to the other side, the credit side of the profit and loss account, as a deferred cost. Deferred this period, deferred this period, but opening balance next period. Current asset this period, opening balance next period. Okay, that is balance sheet item this period, P&L account item next period. As you can see, my adjustment column has balance, which means when that draft journal is eventually uploaded into the nominal ledger, the trial balance will balance, everybody will be okay, and I will come back again to this worksheet and clear it in order to make room for another draft journal. Okay, that is how it's supposed to be done. The draft journal will be documented and passed to an account assistant or an assistant or a bookkeeper to post it will be signed by the head of finance who knows what they are doing, and then it will be filed away for audit purposes. So I'm now going to move on to the next item, which is depreciation charges, okay, as promised. Now the next item is depreciation charges. Now let me just say that in any computerized environment where the system is properly configured and managed properly, depreciation calculation should take place automatically. Once you do your period end run, nominal ledger should be automatically updated with depreciation charges. Now this is because in the fixed asset model of your accounting system, the following codes will be assigned to each fixed asset, okay? This is the fixed asset side of your nominal ledger, okay? I have my fixed asset register here, okay? In the fixed asset register, you have details for depreciation charges. For instance, leasehold property, I have already put it here because in the computerized environment, that is what will happen. You have, for every item in the nominal ledger and in the fixed asset register, a balance sheet code will be given to each item there. And also a profit and loss account code will happen, because the balance sheet code is the cumulative depreciation code. When you do your period run, depreciation will be calculated automatically. This balance sheet code will be credited with your monthly depreciation charge. Okay? The profit and loss account code will be credited. Will be debited. Sorry. The balance sheet code will be credited. Okay? The profit and loss account code will be debited as an expense, that depreciation expense account. Okay? The depreciation expense code, this is a profit and loss account code. Okay? This is the code in which depreciation is charged during every reporting period. And it's an expense code. Now, at the end of every month or at the end of your reporting period, this code is cleared to 0. But the cumulative depreciation code is never cleared. So it's a balance sheet code on your chart of account, and it's credited every time, like I said before, every reporting period, but it's never cleared. It is carried forward from period to period. That is why it is called cumulative depreciation. It stays there for the whole of the lifetime of each asset. So when depreciation charges take place, either manually or automatically, double entry will be debit depreciation expense account for depreciation charge and credit cumulative depreciation account. I will demonstrate that. Now, when an item, a fixed asset, reaches the end of its useful life, depreciation calculation must stop. It must cease. If your system is computerized, don't forget to uncheck. You have to go into the fixed asset model and uncheck the relevant boxes for depreciation charges. Otherwise, it will just continue and your nominal ledger will be messed up. Equally important, if an asset has been sold or scrapped, you must take the following steps. Okay? Now, let me just show you my note. If an asset has been sold or scrapped, these are the things you must do. You have to remove that asset from the ledger. As well as, this is what you do. You debit a disposal account, fixed asset disposal account. You have to debit that with the original cost of the asset sold, which means you go into your fixed asset nominal ledger, you transfer the cost of the asset that has been sold from it, you credit it to that code and debit asset disposal account. You must also go into your cumulative depreciation account. Transfer all depreciation that relates to the asset that has been sold or scrapped from it. You debit cumulative depreciation account and credit asset disposal account with the total depreciation charge on the asset sold. Okay? If there is a sale proceed, you collected money for the sale, you have to debit the cash book with the amount that you've collected and credit asset disposal account. Now, with that, you'll be able to calculate your profit or loss on disposal, which, depending on the size, you can disclose in your profit and loss account as an exceptional item if the item is really material. If it's not material, then it can be buried somewhere among your reported profit. No problem. Okay? Now, it is extremely important that things are done and done correctly. Communication in the work environment, it is very, very important. And it is very, very important for everybody to understand the system they've inherited, even if the system is a mess, okay? You must understand it first before you start making changes. I came across a situation whereby somebody just came in without understanding the system. They just created a mess all over the place. Automatic calculation of depreciation was taking place and was also getting people to post journals, to post depreciation journals manually. So there was, the whole thing was, things were just getting doubled up all over the place and it was a mess. Anyway, let's move on to depreciation charges, journals. My assumption is that we are in a manual environment. So I am going to now post this depreciation to the nominal ledger. Again, I am going to use a draft. This is going to be a draft which I'm going to put on my extended trial balance. Okay? Now, the leasehold building, depreciation for leasehold building has been charged. I am going to credit cumulative depreciation account in the balance sheet. That's the balance sheet code, and debit depreciation expense account, leasehold building. So 1050 is the code for leasehold building depreciation, cumulative depreciation. So let's go there. 1050. Again, I am going to use the adjustment column for my charge, for my, okay. The code is, the amount is £500. That's a credit. 1050. Hang on. Just a minute. 1080, sorry. It's code 1080, not 1050. 1080. Yeah, leasehold building, cumulative depreciation. Okay. Right. The other side of the entry is depreciation expense account in the profit and loss account. Depreciation expense, which is 6285 for leasehold building. 6285. That I am going to debit. As you are doing your debiting and crediting, you must pay attention to your adjustment area. As you can see, make sure the adjustment column is balancing every inch of the way so that you don't struggle with your journal later on. Always come and check, make sure it is balancing. Otherwise, you then start scratching your head later and wondering what has happened. Now, okay, 1090 is building enhancement. Building enhancement. Okay, I'm going to credit 1090. The cumulative depreciation, 1090, building enhancement. Credit cumulative depreciation. Okay. And then debit expense account, which is this one, which is 6290. 6290. And what is the amount? Let me go and check again. The amount is 90 pounds and 19 pence. Again, let's check the adjustment column. Yeah, again, it has balanced. There is no problem. You have to make sure that the adjustment column balances every time as you move along. Now, again, you have cumulative depreciation, computer equipment, 1120. Again, the code is 1120. That's cumulative depreciation. That I am going to credit. Then depreciation expense is 6300. That I'm going to debit. on the P&L account side. Again, I check my, again it has balanced, no problem. So I move on to the next one, which is cumulative depreciation, website development. Credit cumulative depreciation, balance sheet code, 1150. That's a credit. And then you debit cumulative expense account, which is 6315. Yeah. Let me check again. Yeah, we are still okay. It has balanced. My adjustment column is balancing. So then the other side, the last item is office furniture. Cumulative depreciation credit. Yeah, 1140. And depreciation expense, which is 6310, office furniture. Okay. And then we check our, again it has balanced. So that is the way to do it. That is the way to do it. So, thank you very much for your time. Please don't forget to like, share, and subscribe. And I shall see you in my next video. Thank you. Bye-bye.